A lot to worry about, and Fed officials just told us to take summer off, basically, that they'll get back together in September and consider what to do. Do you think they need to do something before then?
I don't think they need to do anything before, but I do think that the list of worries is indeed growing. It used to be the case for the last several months that we've been worrying mainly about the trade war. What is coming from the trade war, very importantly, is what Jamie Dimon pointed out yesterday, namely that now we're going to see the negative effects of tariffs on earnings and therefore also on the economy. The Yale Budget Lab is quantifying that the impact on GDP this year will be minus 0.7. Normally GDP growth is 2, so if I subtract minus 0.7, that brings me to still 1.3. That's not a recession. That is exactly what's going on. So you saw Klarna yesterday say that they were reporting that buy now, pay later was seeing more weakness among consumers. And the issue is exactly that is migrating up towards middle-income households. You're seeing this also more broadly in, for example, in the housing data. The Sonda weekly data for traffic for home builders is beginning to slow down. And this spring selling season has basically been much weaker than the spring selling season we've seen for the last few years. So also the weakness in the housing market is a leading indicator telling you that the middle-income consumer is also beginning to look more stressed.
So you don't necessarily see recession, but this downside to growth that comes at a time of pricing pressure is something that looks a bit like stagflation. And I wonder, some people say, well, if it's not a recession, then it's pretty good. Is this actually a worst-case scenario for risk assets because there isn't a very obvious reaction function from the Federal Reserve, from policymakers, to respond to the fundamental underlying weakness in consumers?
Exactly, because inflation, if that is now going up, we've heard all the stories from Walmart, now Subaru, various, of course, retailers are saying prices will be moving higher over the coming quarters. That's what everyone expects. This is the textbook definition of a trade war, namely higher prices because imports of containers that come in to Los Angeles, of course, things will become more expensive. And that is exactly challenging the Fed's room for maneuvering because they will have to keep rates higher for longer in response to almost no matter what growth is doing. If growth, of course, gets into a deep recession, they will be cutting. But if growth is just weakening, and that is the expectation from the consensus, that's what we're seeing in the data, then you will have this stagflation situation, which is very uncomfortable from a Fed perspective because inflation higher for longer says the Fed should be hiking, but growth slowing down says the Fed should be cutting. So this becomes a question for the Fed. Do they like apples and oranges? Do they put more weight on inflation being high, or do they put more weight on growth?